Hi guys, this is Brad Alexander from FX Large in London. Looking at the US dollar majors, we are still seeing dollar weakness as every major pair is on the wrong side of both the 50-day and the 200-day moving averages. In fact, against the Aussie, Kiwi, Loonie and Renmimbi, we have what analysts call the death cross. If we back out and look at the 4-hour charts, we have the same bearish dollar situation on USD with only dollar-yen on the good side of the 50-period moving average. The Canadian dollar can be forgiven for beating up the currency of its only neighbour, as the Bank of Canada just last week not only announced a 0.25 increase in interest rates, it made it quite clear that more rate rises are coming. We have no significant news from Ottawa until Friday with CPI and retail sales. Wednesday we have crude oil inventories. Keep an eye on this loonie strength during the week, and if news drives price counter-trend, there might be some good short-term opportunities. Pound CAD, for example, has just come off an upper trend line after returning to last week's levels. We are watching sterling this week as the UK and the European Union have returned to Brussels for their next chapter in the Brexit negotiations. Also this week we have yearly CPI figures from London and a statement from Mark Carney today with monthly retail sales Thursday. Technical opportunities on the pound might be overshadowed this week due to the Brexit meetings and the fact that weekend news indicates disarray in Theresa May's cabinet. Euro-pound, for example, had dropped dramatically all last week, and either Brexit and the ECB interest rate or Mario Draghi speaking Thursday might disrupt this pair. It has been rallying this week, probably based on the uncertainty, while investors and media try to decipher what exactly is going on within Theresa May's cabinet. The European Central Bank is expected to leave interest rates at 0%, but there's always volatility and a lack of liquidity around these announcements, and we will be keeping an eye on Euro-dollar as we see a trend line intersecting this key level of resistance. If we back out and look at the weekly euro-dollar chart, we can clearly see that $1.15 has been a key level for over 2 years. We have no reason to expect a break above, but you never know. A break below this trend line could see us heading back to the $1.12 area. On Kiwi dollar, we were watching a consolidation pattern yesterday, but a very bad quarterly CPI report sent the Kiwi weaker. Then the US Senate killed a critical health care bill, sending the dollar weaker. Be careful, however, as we are at a key level of resistance which used to be support over 2 years ago. The Australian monetary policy report from earlier this morning was very positive, sending the Aussie dollar even stronger. If we look at a weekly chart on Aussie dollar, we can see that we may still have room to move with positive Australian news, negative American news, and the price of copper on the way up, which always helps the Aussie. Let's take a look at gold. We can see it has been ranging for most of this year and is on a bit of a bull run based on the weakness of the US dollar. We have resistance at $1,296 and at $1,262, so we may have more room to move on the upside. In closing, watch out early Thursday for news from Tokyo as we have the Bank of Japan's policy statement and interest rate decision. That's all for now. Good luck and happy trading.